Okay, it looks like the recording has started. Um, Hello, everybody. Welcome to today's webinar. My name is Ilan Azbel. Thank you to Axiori for allowing me this opportunity to talk to you about our product today. It's Autochartist. Um, uh, Let me first go through the legalities, and then I'll tell you about what the presentation is about. I'm sure many of you have seen this disclaimer before. Trading does carry a high level of risk. So really, I'll sum up this disclaimer for you. Don't trade with money you can't afford to lose. Trade responsibly, okay? And of course, any news and opinions that we provide today, is not an inducement to actually trade, right? It's all on you. But please just be responsible. Trade responsibly. So today's presentation, if you've heard me talk before, it's about a product called Autochartist. I'm the founder of the company and the CEO of the company. I want you to put your guards down because we're not pitching you anything. We're going to ask you to pay anything. The product is available for free with a live account at Axiori. So this is a purely educational session, right? No one's pitching you or asking you to buy anything. All right. So if you go to the Axiori website and you download the Autochartist MetaTrader plugin, I'm not going to go through that now because we've been through that in a previous webinar. Once you go through the setup and installation process, you'll have this expert advisor installed in your MetaTrader platform, and it's called Autochartist. Now, it's an expert advisor, I know, but it does not trade on your behalf. Don't worry. What Autochartist is, it's a market scanning tool that scans the market for trade setups, and it scans for about 10 or 11 different types of trade setups, depending on your style of trading. And the idea is to allow you to kind of prevent you from having to look at 14, 15, two dozen different charts when you're trying to figure out what to trade, right? So what I do quite simply when I want to use the Autochartist product is I drag and drop it onto the chart, and I get this little window over here, and that provides me a view of what's going on in the market. Now, it is connected to the market watch screen, which in my situation is quite limited, right? I've only added a handful of instruments, less than a dozen instruments. Now, I always recommend traders to do that to limit their account. Oh, I see. Sorry, before I carry on, I see Paul is having some sound. He can't hear me. Is anybody else having sound problems? Can other people hear me? Okay, so other people can hear me. Paul, it must be something on your side. I'll continue. I hope you can log out and log back in, but the webinar will be recorded. So I always recommend for traders to limit their market watch list, because even being a relatively experienced trader myself, I struggle to monitor 2-3 dozen different instruments. You need to cut yourself down to a dozen. I would even recommend a half a dozen or less instruments that you're following closely and start to get to know intimately. And when you do that, you'll actually notice that the number of trading opportunities that come up on Autochartist significantly decreases. I've got about a dozen here, and I get 2 pages of different trade setups that are available on the market right now. And when I click on one of these trade setups, it'll actually show me the trading opportunity. So you can see here, I dragged and dropped it onto a USD Swiss franc daily chart. There happens to be a triangle here, and you can see that Autochartist has drawn that support resistance level and provides a target region of where we think that price is going. Okay. And this is something we're going to be discussing today, is past performance stats and how well it does and how to choose the patterns for you. Now, of course, there's lots of different types of opportunities available. Here's something on silver, an exceptionally large movement on silver. It says big movement. Here's something on euro dollar hourly chart. Um, uh, Something on US dollar, Canadian dollar. So lots of different instruments, and you can go through these in your own time, right? And I'm not going to go into each type of pattern right now that we did in the previous webinar. Uh, After that brief overview, I want to discuss how to actually choose which trade opportunities to follow, right? And you can do that in a number of different ways. The first thing you got to do is you got to figure out what is your trading style, right? Do you trade chart patterns, Fibonacci patterns, key levels? Whether you want to be alerted to these big movements or not? Do you trade M15, M30? Now, I have a reason for setting up my Autochartist in this way, right? With my chart breakout chart pattern selected, my approaching and breakout key levels and big movement selected. And I'll talk about that, about the statistics. And with regards to the intervals, this is something, it's actually quite a large decision that you as a trader need to um, you need to make, because if you are trading full time and you're let's say you have your MetaTrader open all the time on another monitor or something while you're doing other work, then you can trade the 15-minute, 30-minute candle charts. But if you're the kind of trader that looks at your MetaTrader once or twice a day or even 3 times a day, I always hesitate to recommend looking at the really, really short-term opportunities, because you need to really monitor the markets very carefully, because they're available one moment, they're disappeared the next, and you really need to keep your finger on the pulse of it. So unless you're a full-time trader, you need to switch those two checkboxes off for M15 and M30. Okay, so that's the first thing you do. You start with your kind of style of trading, right? The next thing that you want to do is potentially add some market indicators. Okay, so let me show you the two kinds of indicators that I'm going to talk about today. The first thing that I want to add in is a simple moving average. Okay, and I'm actually going to set that to well, you can set to 15 days. I'm going to set it to about 30, a period of 30. Okay. So one thing you'll learn about technical analysis is that it's all about confirming indicators, right? Indicators that are pointing in the same direction, right? So when I look at a example like we have over here, where the price has been trending down quite substantially, looks like there's consolidation in the market right now, and there's been a breakout. Okay, so we can see that the breakout was okay. It was strong. There's a bit of a confirmation candle, but certainly when I look at this moving average line, um, well, certainly the period of 30, it doesn't seem to be pointing up in the same direction. The moving average is still going sideways. So this is, for me, not a clear indication of a buy signal, right? I would be looking for multiple indicators going in the same direction. So if this moving average is pointing north or up, then I would consider taking a position. But right now, the indicator is kind of moving sideways. Although I must say that the one nice thing about this pattern is the fact that there has been, or currently the daily candle is bullish, which means to me that we are getting confirmation of this breakout through this psychological green line, right? So for me, that's already a confirmation. So if, let's say I just looked at this thing at midnight and I just saw this little breakout candle with a sideways moving average, I'd probably say, you know what, I'm not sure about this. But certainly that this confirming candle that we're currently going through right now does seem to be a confirmation candle for me. Let's look at this Euro USD example over here. So I clicked on Euro USD H1, and you can quite clearly see how the market is moving sideways. Quite a bearish movement down on Euro USD. And look at when we actually broke through this resistance level, this green line. On that candle over here where I've got my mouse, you can see very clearly that the simple moving average, the red line, was pointing downwards. So what we're getting here is a situation we've got conflicting information. We've got a chart pattern that says buy. We've got a trend. You can just look visually, the trend is saying down and the moving average is saying down, right? And so you look at a pattern like this and you think, you know, uh, there are so many opportunities, right? I've got close to 20, 25 opportunities to go through. I would move to the next one, right? I would look at, say, you know what, that's not the kind of thing I'm looking at. Similarly with this one, although we seem to be making the right call, it's moving downwards. I look at an opportunity like this and say, look, the trend is up. The trend is confirmed. The upward trend is confirmed through this moving average. Am I confident that there's going to be a reversal? I am not sure. Let's look at USD CAD. Okay. So here's an interesting example, right? So we have an inverse head and shoulders, quite a nice inverse head and shoulders we see over here. And you can see that the price has broken through this green level over here, right? The shoulder level. And so when I look at this opportunity, I'm seeing a very, very strong bullish breakout. And at the point of opportunity, I'm actually seeing the moving average sloping upwards. So for me, these are two confirming signals that I look at and I say, you know what, this is potentially a position that I could take, right? Because now I've got two confirming signals. So I'll show you an example where you have kind of one and another one that doesn't know what it's doing, moving sideways. We've got a few where you've got two completely different views, and we've got an example here where we've got a very strong breakout. You can see this candle over here where my mouse is, very strong breakout, and a bullish moving average, right? So this is certainly one that I would consider very, very strongly. In fact, you will hear me say something about inverse head and shoulders in just a moment, because it's one of our top performers from a past performance perspective. And I'll give you some more legal disclaimers when we talk about past performance. But for now, let's just run through a few examples. Here is something happening on gold. So we have something happening on gold. And again, you can see a downward sloping moving average. Not a very strong breakout. I'm not sure if I would take this position, because I guess I would wait for a confirmation of the breakout before I trade this, maybe through the support level before I place a trade. But potentially, worth maybe some kind of sell stop. If you're really eager to take a short position on gold, maybe a sell stop at around this level, 1991. If it happens to go through the support level, then you'll be in the market immediately, right? Taking a position. But other than that, don't rush to take a position on gold. And so this is one way of trading the markets, by looking at this moving average. And the moving average additional indicator is something that I would use primarily on these breakout patterns. Breakouts meaning trade setups that have already moved through support or resistance. Okay, so so if you look at Autochartist, that's these colored arrows. Now, if I extend my search criteria to emerging patterns, you'll actually see a few other things coming up. You'll see these gray icons coming up. These are what we call emerging patterns, right? So they are patterns that have not yet broken through support or resistance. So you can see in this situation, the price has not yet broken through support or resistance. So is there a possibility that it will continue to go up? So certainly in this situation, the trend, if you're a trend trader, you could say, yes, the moving average is pointing north, and the whole trajectory of Swiss franc on the hourly chart is moving north, and this is potentially something I am interested in trading. However, I must point out that the distance between this resistance level and the current price is maybe, a little small. So depending on what kind of trader you are, let's say you're a train trader, you might not want to place a position right now. You might kind of want to uh, maybe trade a buy stop order around this line over here, so that if the price breaks out, then it'll go long. But on the other hand, if you're a mean reversion trader and you think no, it goes up and down, then you might want to set some kind of sell limit at this level, so that if the price reaches it, you believe that there's going to be a bounce to the short side, right? So again, I can't give an indication of which way to trade. That's again obviously up to you as a trader, but I'm giving you some ideas about how these emerging patterns, these gray icons, can help you. So instead of being reactive to the market, which is what the colored icons give you the opportunity to be, you are being proactive in taking these stop or limit orders, depending on which direction you want to go. But again, I just want to make sure you understand that these pending orders, or these emerging patterns, just watch that you have enough. Should we say pips, or enough opportunity for you to take the risk on that trade, right? So quite appropriate for people that are watching their meta more frequently or more actively. So yeah. So I see there's already one question which I want to answer now. It's the name is a little fuzzy for me. It's Nissan, I think it is, if I'm pronouncing it correctly. And he's asking which time frame is good and which moving average is best. So about the moving average, like which moving average, simple moving average, exponential moving average, a smooth, simple moving average, these are all little details. The truth is that um, when it comes to moving averages, or in fact any regular technical indicators, not the chart patterns that Autochartist provides, but the regular technical indicators, you can pretty much choose the result you want to get, right? So I can make this 30, I can make this the default 14, which is what it comes with in MetaTrader, and I'll get a different result. Now, the way I would tell you to use and to say that there's no right or wrong, the way I would normally say is try zoom out of your chart and see whether the moving average you have chosen is indicative of the price movement of the indicator, right? So if I, let's say, choose I don't know, let's say 100 moving average, right? I look at that and I say, this 100 moving average is simply not indicative of anything that the price graph is doing. It's not taking into account the market volatility or anything like that. If I go and I look at, let's say, a 50 period moving average, it's getting better, but we're still missing out on all these kind of big movements, right? And these are some pretty substantial movements. If I look at some of these prices, 100 pips in size, right? You can't really tell me that that thing looks like the price graph. So let's look at 10. Of course, as we come down with our moving average, so you get more and more kind of volatility in the moving average. But this looks really good, except we're getting a lot more noise, certainly at the end over here and over here. So it's a bit too sensitive. So you might want to go with that default, around a 15 or 20 moving average specifically for a US dollar Swiss franc 1 hour, right? Looks like we're getting a nice smooth curve, yet it's following the contours of the price graph, right? So we're smoothing out some of the noise. So again, don't just put in any number, or whatever someone tells you to put in, because the other thing about markets is that they're constantly changing. So something that describes the moving average a month ago may not, I mean, something that describes the market a month ago may not describe the market now. So let's say I choose 20 now, but in 2 weeks' time, I might want to relook and say, you know what, actually a 14 kind of follows the contours better and smooths out the volatility I don't want to see, or maybe it is a 50 or something like this, right? Let's say the market is trending and moving a lot. So you need to look at that yourself. There isn't a right and a wrong. I just want to say that with regards to using additional indicators with Autochartist is that we're not looking for the answer, like what is the best. We're just looking for confirming indicators, right? So whether I'm looking at a, what did I set it to last? I don't remember. It was 15 or 20, right? Or I look at a 15, okay? It's kind of giving me the same information, right? In both ways, it's kind of going upwards. And so I'm looking at this. I've actually seen people add multiple moving averages, right? I know there's a few kind of gurus using our tool, and they promote looking at 3 or 4 moving averages, right? You see this rainbow of moving averages going in different directions. So you can use a rainbow of moving averages if you wanted to. The whole idea is just to get an idea whether there is a confirmation of what Autochartist is actually telling you, right? Now, the one thing I want to point out is that there is another indicator which sometimes is useful, and that is a different style of indicator completely, not a trend indicator, it's an oscillating indicator, something like a relative strength index, right? You can use a stochastic, a RSI, relative strength. You can use, whatever you want. Now, typically what we would say is that uh, an RSI is a sell over 70 and a buy under 30, but that's not what we're looking for. We're not looking for buy-sell signals, right? What we're looking for is to see whether the market is tending to oversold or overbought, right? So in this situation, if you're a big fan of RSI and that tells me that you're a swing trader, not a trend trader, then okay, you might not be getting a buy signal, a sell signal right now because the RSI is not through 70, but certainly it's telling you that the market has run up a bit, right? That it might not have enough energy to go all the way up to this green line over here. If it does, certainly that would be a very, very strong sell, right? So let's say the price did make it up to this green line. You would have an RSI up here, and then all you mean reversion traders out there would say, well, now I've got 2 confirming indicators hitting a resistance level, right? When we're looking at chart patterns, we're hitting a psychological resistance level, and the RSI is telling us that the price is overbought, so it's too high. So this is my opportunity to take a short position, right? Similarly, on the downside, but specifically this situation over here, is something you could watch. USD Swiss franc hourly chart. If we go any further, maybe up to 91.90, there might be a strong argument for a short. For a short position, if you're heavy on the risk right now, you could even take some kind of sell limit order at 0.91 or 0.92. 0.9190 or 0.92, right? A nice round number. I love nice round numbers. The other thing I notice here is see how the price has consolidated at that level before. I like those kind of things, where we've seen movements to these kind of levels, right? So that would be a very interesting trade to take now. A sell limit at 0.92 or 0.9195, somewhere around that level. Now, we do give you one additional thing that you can look at Autochartist, and that is the performance statistics. So I'm going to show you what that looks like. If you open up this little world icon, you can launch 2 different things. You can either launch the web application, or you can launch the past performance statistics. Now, I've launched the past performance statistics, and I'm going to bring them across to my screen over here, and you should update on your screen now. While I catch my breath, I'm going to read. I've got another question coming through. As I said before, I think it's a make. Sorry, guys, the font is really small on this webinar platform. I can't really see the names very clearly. I really apologize if I'm pronouncing them wrong. Make is asking, which indicators do you think are worthwhile using when using with Autochartist? If you're a trend trader, you should be looking at a trending indicator, like a moving average, to point in the same direction. If you're a swing trader, then you should be looking at an oscillator of some sort. So we're talking about RSI, or we're talking about stochastic, that kind of thing. Yes, and there's another question. The name is way too big for me. I cannot. Netrasakta, I think it is. Yes, there will be a, uh, a webinar recording of this. So I hope I've answered your question. Let me continue with this because I see I'm already running to close to half an hour and I still got quite a bit to discuss. So firstly, the performance stats. First, I have to give you a disclaimer. Very, very important. These performance stats are based on past performance over the last 6 months. You must remember about statistics, right? What was that famous story? What the famous saying? There's lies, damn lies, and then there's statistics, right? So you have to remember that past performance might not be indicative of future performance, right? It's very, very important, right? So what we're showing here is how certain types of trade setups have done in the past, over the past 6 months. The second thing I want to point out is that these performance stats are not an indication of how much money you would have made or lost. These performance stats simply measure how often we hit our target region. And I'll show you what that means. Back to the MetaTrader platform. If I switch off my emerging chart patterns and I just look at completed patterns and breakout and approaching key levels, how often have I hit our target region? The target region is in gray. All right. So if you see a target region, this is the question. How often have we hit it? Or, for example, if we look at the support level, if we said, oh, the price of EuroCAD H1 is moving towards support, how often did we hit our support level? Okay, so it is not how much money we made, right? It's simply, did we hit it or not? Okay, so the way we do it is we identify the pattern, then we give it one pattern length to follow through on that, right? So if we're looking at this, let's say this US dollar Swiss franc opportunity, this is, let's see how many, I don't know why this is not opening. Oh, there we go. Pattern length 47. So it's made up of 47 daily candles. So it's just over 2 months of candles. So we're giving, we give ourselves about 2 months for this thing to hit its target level, right? In fact, I can tell you that if we're going to hit it, we're probably going to hit it in the first 30%. And that's something I'll talk about in just a moment. So I kind of look at 1/3 of the pattern length. So if this pattern is made up of 40 odd candles, about 2 months worth of candles, I'm looking at half a month to allow it to move into this region over here, right? So you think it's a long trade, but this is on a daily chart, right? So you want your position size to be much smaller. Of course, if you're looking at an hourly chart, that's something completely different. We're looking at hitting this thing in the next 2 to 3 hours, right? So that's a completely different type of a metric, depending on which time frames you're actually looking at. So let's go back to the performance statistics. So as you can see, we've got the performance statistics for all the Forex instruments, and they're broken up by completed chart patterns, that's breakout chart patterns, and then breakout key levels and approaching key levels. And so let's look at the chart patterns. So if we click on chart patterns, we get the statistics over the last 6 months. We've identified 26,000 of them, of which just under 17,000 have hit their target level. That's around 64% have hit their target level. But it's more interesting to look at the real details of it. Remember that inverse head and shoulders we looked at just a moment ago? So over the last 6 months, we've identified 97 of them, of which 81 hit their target level. Right? So that's a really, really interesting opportunities, right? So if I'm looking at USD CAD and I'm seeing an inverse head and shoulders, I'm thinking, in my head, okay, wow, I've got a very strong breakout, a bullish trend in my moving average, in the recent moving average. I have past performance statistics that are nothing short of incredible. Okay, this is definitely an opportunity that I need to be looking at. Okay, let's actually look at how USD CAD has done in the past. If I can find a USD CAD, I wonder if I actually find USD CAD, there it is, USD CAD. Oh, not bad. So in USD CAD, out of 351 opportunities that we identified in the past, 237 hit their target region. So this is pretty good, 68%. I mean, most professional analysts only aim for 51%. Okay, so we didn't do too badly there, 68%, along with a very strong inverse head and shoulders. This is something that I would definitely follow. So I urge you to have a look at these performance statistics. There's quite interesting ones, for example, by the hour of day. Technical chart patterns in general do really well during the European session because they're grounded in market psychology, right? So uh, as you can imagine, psychology happens when there's lots of participants in the market, and as we know, London is the capital of the forex world. It's not New York. That might be the capital of the equities world, but forex certainly is London. And so the European session is the most liquid session there is, with the most participants, and that's when the most trade happens, and obviously when the psychology plays out. And so this is a very, very important time of day. So if you're trading European session, lucky you. Technical chart patterns add real value. And so you can really go through all these statistics in your own time and see what works for you, what doesn't work for you. The next type of opportunity that I want to talk about is the breakout key levels, and I'll show you what that looks like in Meta. So the breakout key levels in MetaTrader, they look like this. So it's a resistance level with a breakout and a target region, right? Or a resistance level with a breakout in a target region. Or here's one on the Australian dollar, a breakout with a target region, right? So you can see that Autochart has done quite well of identifying this, this level. You can see quite a few consolidation points at this price, as well as a very strong breakout with a movement down to this gray area. So that's what key levels are. Now, there's much fewer of them, but the stats increase quite a bit. So on average, 75% over the last 6 months have hit their target region, right? And you can see that the percentages are mostly well above 70. We've done really badly though on the Hong Kong dollar. I'm not quite sure why, but very, very strong percentages on the breakout key levels over the last 6 months. And I will tell you that my experience is such that anything to do with horizontal psychological kind of overbought, oversold levels seems to work quite well in the market. In fact, if I go back to the statistics for just a second, to the statistics on chart patterns, you'll notice that even things like ascending triangle, an ascending triangle is a triangle where the top resistance level is horizontal. They do really well. And the descending triangles mostly do well. So it's circumstantial right now. The market's been moving a lot, that the channel downs and ups have been doing well. But in general, the ascending and the descending ones do consistently well. So do double tops and double bottoms, head and shoulders and inverse head and shoulders. Those do really, really well, and the rectangles. And the rest kind of fluctuate as the market conditions change. And so it goes hand in hand with the kind of good stats that we're getting on the horizontal levels, the breakouts. Now, if you look at the approaching, now this is a really attractive number. 82% of the emerging or approaching key levels that we've identified over the last 6 months have hit their target level. Now, I want to show you what that looks like in Meta. We click approaching key levels. Okay, currently there's only one, but that's fine as long as we can see what that looks like. You can see right now that the price, we're saying that Euro CAD has previously tested this level multiple times. You can see it has over here, over here, over here, 1, 2, 3, some consolidation here, 4, 5, 6, 7 times it's touched it in the past. and now it's moving towards this level, right? So what Autochartist is saying is that it's touched it 7 times in the past. There's a high chance it's going to touch it again. These things happen not as frequently as chart patterns and not as frequently as breakout key levels. And the stats are really just phenomenal. Okay. However, like everything in life, you get nothing for nothing, right? the problem with these approaching key levels is that they are very, very, very short-term opportunities. In fact, if I'm looking at this opportunity right now on Euro CAD, you know, what are the? Let me actually look what the price difference is right now. So it's 156.00 to one. So it's what just a 20-30 pip possibility of movement, right? If my calculation is correct. Sorry, my eyes are so bad. I don't know why I can't see my fonts today. Time to get some new glasses. Anyway, so you know, if you're watching the screen all the time, these are interesting opportunities. If you're not watching the screen all the time, don't be desperate to just take the opportunity, because sometimes we identify them too late and there simply isn't time to take into account the spread of the instrument, possible slippage, and some profit, right? So, you know, they are our highest probability opportunities. And if you want, you can set yourself to just watch approaching key levels. But again, you know, you might want to be very, very careful if there's enough place for you to actually make some money. If we increase the time interval to M30 and M15, you can see there's some more opportunities. But look at that. We see that opportunity, but it's already gone through that level, right? So we've missed it, right? So and let's see what happened on New Zealand dollar. Okay, again, we identified the opportunity. Okay, we identified it a while back, probably 2 hours ago. It hit that level, rebounded, and hit it again and broke through. So we're a little bit late on that one too. And that's what I mean. Unless I had this thing open, running all the time, you know, um, uh, you know, you really, really have to be careful around trading these emerging key levels. Okay. Um, uh, I've spoken for almost 40 minutes. I guess I want to open up the the room for Q&A. And I'm actually just gonna I've switched monitors and I'm going to look at my other monitor to look at some of your questions. Okay, so Anand, you're asking a great question. How are the targets determined for different patterns? That's a very, very sophisticated question. I can tell immediately that Anand is a experienced trader. Many traders don't care about that, but let me explain to you. Let me zoom in a little bit. So the first thing I want to tell you is that Autochartist is just a product name, but the techniques we use are nothing new in financial markets. We use something called technical chart patterns, or sometimes you hear it called Dow theory. It's been around since the 1930s. All that we've done successfully is automated it. Okay, so any book that you pick up that has a chapter on technical chart patterns will use the same techniques we use. So what we do is, let's say the theory of chart patterns. I wonder if there's a drawing object on this tool. Let me see if I can draw. I hope you all can see a whiteboard. Let me know if you can see a whiteboard. Okay, yes, you can see a whiteboard. Okay, great. So the theory of chart patterns says that if you have a pattern and you want to figure out the target level, take the initial trend, map it onto the end of it. Oops, I'll move my video. Yeah. Map it onto the end, and that is your target level. This is where your target area should be, right? So that's exactly what we do at Autochartist. We take the initial trend, and then we map it onto the target level. Can you all still see my screen? Yes, you can. Now you will notice in this situation, the initial trend was actually very bad, right? And in fact, if you open up the patterns details window, you'll actually see there's almost no initial trend over here. You can actually see it here, this very, very small initial trend. The market kind of almost started from seeming noise, right? But then the price went up and down very uniformly. You can see a very nice uniform formation and a small breakout. And so what we do is we do exactly what I did on my whiteboard when I showed you, but we scale it according to the other visual components, right? So let's say the overall quality was 5 out of 10. The overall visual quality was 5 out of 10. And so when I look at again, this breakout, let's say theoretically, the breakout should have been this big, right? It should have been up here. But now I look at this quality and only give it a 5 out of 10, then I would set the target halfway. Okay, so I would only set it over here, right? So we just do a bit of scaling based on the visual quality of the pattern. But other than that, it's a textbook theory of technical chart patterns, and that's how we do it. So I hope that kind of at least gives you a bit of a hint as to how we do it. Okay. Okay, so yes, so Thomas is asking, wow, you guys are an amazing group, actually. Thomas is asking, how would you set your stop level? Does Autochartist provide any recommended level? So, Autochartist does not provide a recommended level for a stop because we are precluded from doing this. It is otherwise you become an advisory service, right? But I would certainly like to educate you around how I trade, as well as some information about market volatility. So what I'm going to do, I'm going to switch to an H1 chart, and I'm going to do that. Okay, so now, if I look at USD Swiss franc, if you notice when I drag and drop my Autochartist indicator, I get some blue lines on the right over there. I'll just do it again so you can see them coming up. See those blue lines? So Autochartist doesn't give us a indication of where to set stop losses, but we give an indication of market volatility. So the first little kind of section over here is where we think the US dollar against the Swiss franc will trade in the next hour. The next one in the next 4 hours, and after that in the next 24 hours. So we give you an idea of approximately what kind of volatility to expect for the next 24 hours, right? And so if I'm looking at a trade like this, US dollar Swiss franc, and I'm, let's say, looking at trading long, then what I would do personally is I would look at a consolidation level, right? Where I can see prices have consolidated. So if I look at something like this, where I set my red level here, I can see the prices consolidate that level a few times, 1, 2, 3 in the near term, 4 times in the short term history. Longer term, I can see over here in the back in the middle of my screen, it consolidate that level, right? So I can see lots of consolidation at that level. So for me, that's already an indication that this is a good stop level. Secondly, what's nice for me is that I can see that if this price moves in the wrong direction, I'm not going to be knocked out in the next 10 to 15 minutes. I might be knocked out within the next 24 hours, right? So I'm actually giving myself an opportunity to make or lose money, right? Because and I'm sure if some of you have traded, there's nothing worse than being knocked out because of market noise, right? That's the worst thing. So if you set your stop loss, over here somewhere, then you think, and then you get knocked out, and then the price continues to move in the direction you initially predicted, and you start blaming the broker and saying, hey, you followed my stop loss, blah, blah, blah. Actually, it's your own fault. You're looking for someone to blame. You need to take into account market volatility, right? And the market trades differently at 8 a.m. London time with different volatility compared to noon New York time, different volatility we compare to Australia, when Sydney opens. Okay, so it trades differently for different times of the day. And so you cannot simply choose one, stop loss, 10 pips or 20 pips, whatever it is. You need to look at current market conditions. So look at those volatility indicators. Even if you completely ignore the Autochartist trading opportunities, right? You don't actually trade using Autocharts. You can minimize it, right? And just look at the volatility. That's also fine, right? At least it'll give you an idea of the kind of levels where you should be setting your stop loss and take profits based on previous turning points, as well as the volatility that you can expect over the next few hours. Okay. You're kidding. Have I been talking without seeing my screen? Oh my gosh. Did I give you that whole spiel without seeing a screen? No! Oh my goodness gracious! I'm still learning this webinar platform. Oh my gosh. Okay. Let's go again. So you heard me say a whole bunch of things. I'll try and not sound like a complete idiot and rehash all of that. But these blue levels, right, are where the price ranges for the next hour, 4 hour, and 24 hours, non-directional, where the price could be moving, right? So when you're looking at this and you're setting a stop loss over here, where I've set my red line, then I can see consolidation at these levels before, right? And so this would be a good price where I personally would set a stop loss. And I can see that this stop loss that I'm potentially setting is in the next 4 to 24 hours of volatility, right? That's where it could hit if it went the wrong way. So I would set my comfortably set my stop loss over here, because if it does move in the wrong direction, I know that I have time to react. If, for example, I set it up here, then this could move back through my stop level in the next few minutes, right? And then I'm just getting knocked out due to market noise, and that's not what you want to do, right? You do not want to get knocked out due to market noise. So rather set your stop loss a little further out, give yourself time to react. You could close your position, you can reduce your position, you can do lots of different things to react to different types of market conditions. But just don't get knocked out due to don't get knocked out due to market noise. That is very, very important. Okay. All right. This is one of the longest webinars ever. I try to keep my webinars down to 20 minutes with 10 minutes of Q&A, but you asked some pretty good questions there. We will send a presentation, a recording of this webinar. I have 2 more minutes if you'd like to ask me any more questions. Otherwise, I hope you enjoyed it. I hope you learned something. And remember, no one's trying to sell you anything. Just open a live account and you can have access to this tool. So I hope you enjoy using it. Yes, so Thomas is asking, before I say no, so Thomas is asking, is it possible to download the stats so you can see when the signal is triggered for each pair? Yeah, so it's quite simple actually. Let me just remove my expert. I hid it away. Let me try and bring it back again. So Thomas, if you want to get to the stats, it's quite simple. Just click on that little world icon. I should be able to click on it once. Copy and paste this URL, performance statistics, into a browser, and you will see these performance stats, and you can click them, and you can right click and print. You can do what you want to them. That's actually what I recommend normally, is to just right click and print, and do it kind of once a month. They don't. I mean, although we recalculate them every week, they don't change that much. Kind of once a month is enough to reprint them and reference them if you want to before you place a trade. But yeah, you don't have to do it every week. But certainly you can, or you can right click, you can download them, or I guess you can even copy and paste them into Excel or something if you really like. Oh, whether you can download into a CSV. Oh, I don't think I don't think we have it in CSV format, unfortunately. Not from what I know. You might want to drop an email to support@autochartist.com to see if they can send it to you. Maybe our support desk has it in CSV. Maybe somebody else has requested it before, but otherwise it's just available like this. All right, thank you, everyone. Hope you enjoyed the webinar, and we'll send you a follow-up recording very, very soon. Enjoy the rest of your day wherever you are in the world. Stay safe, put your mask on, travel safely, and look after yourselves and your family. Bye, everyone.